From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power. This is where the world of politics meets the world of business. I'm David Weston. Today is the second day of the second impeachment trial of Donald J. Trump, as the House managers move on to the merits of their case. To put this trial into a broader historical perspective, welcome now someone who has actually defended a public official in a trial in the Senate. And then he went on to write the definitive account of the impeachment of President Andrew Johnson. David Stewart's latest book, I should say, is George Washington, The Political Rise of America's Founding Father. I certainly hope it's not your last, David, but thank you for being with us. Great to have you here.
Thanks.
So put it, you do understand the history of these impeachments so well, as well as the way they operate in practice. Put this trial in a broader perspective compared to what's come before.
Well, we're looking at an impeachment that I think has higher stakes than several of them. We've had 5 now, 4, of course, in the last 50 years involving presidents. And at least 3 of them, by my study, reflected basically an allegation that the president was unworthy, that he had abused his office in a way that meant he shouldn't be president. But 2 really raised a much more fundamental issue as to whether the president was disrupting the Constitution, whether he was undermining the balance of powers, particularly with Congress in both cases. And that's the Andrew Johnson impeachment that I wrote about back in 1868. And this one really does raise a fundamental issue. And I focus on where in the articles it says that Mr. Trump imperiled the co-equal branch of government and interfered with the peaceful transition of power. They really go profoundly to the core of our constitutional system. And so I think the stakes are actually higher. I mean, we're all feeling a little numbness from the impeachment blitz that we've had in the last year. But I think we need to step back and see that this really is a big deal.
Assuming for a moment, which we can't assume, that the president is guilty as charged, if in fact he did what he's accused of having done, it strikes me it's a challenge both to the process by which we choose the president, the electoral college counting, but also the very health and safety of the Congress itself. I mean, the jurors that are sitting there were there, and they had their well-being threatened by this mob. I mean, it's almost a direct attack on the Congress. That's in some ways even worse than Andrew Johnson, isn't it? Andrew Johnson sort of fired a cabinet secretary that they didn't want fired.
Yeah, no, he violated intentionally a statute of Congress. This is Johnson, but you make an excellent point, which is by the accusation of the House managers and the House of Representatives, Mr. Trump sent people to intimidate a co-equal branch of government. That's unbelievable. That's really not what ever should happen. It shouldn't happen the other way either. So that issue, which is going to be, the members of the Senate are going to have to figure out what they think about that, whether they put a lot of weight on Mr. Trump telling the crowd to fight like hell, to basically stop the counting of the electoral votes and all of the challenges to the election that he kept raising ahead of time that nobody else was finding very persuasive. Whether that really does constitute a direct confrontation, a direct conflict with their powers, it is a remarkable thing to me that senators in the Republican Party are not more, don't say they're more upset about that. They had to hide. They had to run away. They were at risk. You would think that would have a big impact.
I wonder, David, if it's possible. Again, you've actually tried one of these, defended one of these, not of a president, but of a public official. I wonder if, in fact, the more grave the charge, the harder it is to convict. And that is the sense, if we really did believe our president had specifically intended and desired for that attack to be on the Capitol, that is so frightening, you're almost inclined to say, I don't believe. He did say some things, but he didn't realize where it was going to lead.
You have a deep and, dare I say it, almost twisted understanding of the human psyche. I hope that's not true. It shouldn't be that way. But you may be right that it's harder to confess that your own president, a man you've supported, did such appalling things. It is a real test for a lot of these senators of their own commitment to their oaths. They're going to have a hard case in front of them. I think we saw yesterday that the House managers are skilled advocates. They know how to present their case. They're not going to be diverted by distractions, and they're going to have to. The senators are going to have to confront this, and they're not going to have a lot of cover. And they're going to have to decide where they come out on an issue that will have repercussions for them politically. Yeah, and it's important to recall, this is a political act. Yeah. It looks like a court. It sounds a little like a court. They talk about cases and precedents, but it's completely political.
We have a viewer writing in, actually, with, I think, an intriguing question. Judging yesterday, most people thought, certainly on style points, that the prosecution won hands down as opposed to President Trump's lawyers. But the question from a viewer is, could the House have done a better job of preparing their case? Did they rush it? Should they have done more discovery, as it were, find out more facts? Would it have been more compelling for the jurors over in the Senate?
It's as Donald Rumsfeld would have said, it's an unknown unknown. I don't know what else is out there. But I do believe they were following what I think is true, which is in most impeachments, the information is known. It's public information. We subject our government to great scrutiny. This was televised. We saw it in real time. We've seen everything that Mr. Trump was tweeting, was saying. We've got tape recordings of his phone call with the Georgia election official, browbeating them or wheedling with him to get him to change the vote count. We've got a lot of it just happened in plain sight. So is there more out there? Is something that would show us, Mr. Trump actually fiddling while the nation's capital burns? Maybe, but I can't think it's terribly significant. And, the defense was playing this, heads they win, tails we lose case where they were saying, they went too fast, but they went too slowly. And that's what you get into here. They'll say, well, you should have done a full investigation, but then he would have been out of office for 3 months. And what's the point of having that trial? Yeah. So nothing's perfect. I understand why they wanted to go ahead quickly. And it makes sense to me, actually. And I want to stress, they kept glossing over this yesterday. Andrew Johnson got impeached in 3 days. And with Trump, it took 7. So this is not the fastest ever.
Okay. Thank you so much, David. Always great to have you here. That is lawyer and author, and I left out his most important credential, which he is a law clerk for Lewis F. Powell, Jr. He is David Stewart. Thank you so much for being with us, David.
Just like David Weston.
Coming up here, we're going to hear from Suzanne Clark, the new U.S. Chamber of Commerce CEO as of next month. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. A World Health Organization panel is recommending AstraZeneca's COVID-19 vaccine for emergency use for adults over the age of 18. It's set to become the second shot the agency approves after clearing the vaccine from Pfizer and BioNTech in December. It's good news for developing countries, many of which are waiting to administer their first shots, as wealthier countries have already inoculated millions of residents. House impeachment managers will lay out their case today. They'll argue that former President Donald Trump's incitement of the mob that attacked the Capitol began much earlier with his false claims of election fraud. The The managers also plan to show more video taken from Capitol security cameras on January 6th. The House members plan to finish presenting their case on Thursday. Mr. Trump's lawyers will then get their turn. Prosecutors in the state of Georgia have launched a criminal probe into Mr. Trump's January phone call asking the state's Secretary of State to, quote, find enough votes to overturn his loss there. President Biden's victory in Georgia was reaffirmed after election officials recertified the state's results in 3 separate counts of the ballot. Turkey's president is ruling out discussing a federal system to reunify Cyprus. Speaking to lawmakers today, President Recep Erdogan insisted that a 2-state accord is the only solution for the technically split island. President Erdogan also took a swipe at the Greek prime minister, accusing him of being confrontational and of disrupting talks aimed at reducing tensions between Greece and Turkey. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. For 108 years, the U.S. Chamber of Commerce has represented the American business community in Washington, working with lawmakers to explain what their decisions may mean for companies and for the economy, and explaining to business what is going on in Washington. As of next month, the U.S. Chamber of Commerce will have a new CEO. Suzanne Clark will succeed Tom Donahue after a career in Washington, much of it at the Chamber, and we welcome her now back to Bloomberg. So first of all, congratulations, Suzanne. It's a terrific position, and I know you'll do great things with it.
And I'm happy to be back with you. Thank you.
Okay, so let's start with a meeting you were not at the White House yesterday, because Tom Donahue, your predecessor, was there, where President Biden met with some leaders of U.S. business. What did you take away from that meeting about where we need to go together, business and the government, going forward to help this economy and, frankly, help workers and people across the country?
Great question. I think what we took away from the White House meeting yesterday was that there is real opportunity for some bipartisan cooperation in getting the next pandemic relief bill done. There is real bipartisan agreement on the focus on a vaccine rollout, on getting schools reopened, and on getting real relief to families and small businesses that are hurting. And that's good news, and it's the Chamber's #1 priority.
How will working with the Biden administration be different from working with his predecessor, the Trump administration? I mean, they're very two different men, and also the policies they're setting out are different. How is it different today?
You know, it's interesting you mentioned our 108-year history. And in the 108-year history, we've worked with every administration. And some things remain the same, which is in every administration, there's stuff we love and support and push for and vigorously advance. And in every administration, there's stuff that we fight and defend and oppose. And so in some ways, it'll be the same, just a different set of issues.
Well, which is exactly my next question. Where do you think you overlap, you coincide with the Biden administration? Where do you think you don't like so much where they're going and would like to talk them out of it?
Sure. Look, again, I can't say it enough. Pandemic relief, pandemic relief, pandemic relief. Then infrastructure. I think there's a real opportunity here to come together in a bipartisan way and get infrastructure done. Not only does our country need it, not only does our economy need it, not only would it create jobs, but it would also create some real bipartisan governing muscle and get to a point where the people in the room can govern and help lead the American people, which would be fantastic. We also see pathways ahead on immigration and on a number of workforce and education issues. I think on the other side of it, we will oppose any opportunity to raise taxes in the middle of this economic crisis. We will oppose onerous regulations. We want to see more done through legislation. You know, at the end of the day, when there's bipartisan compromise and legislation gets done, then businesses don't have this every 4 years guardrail to guardrail strategy situation they have to deal with.
You mentioned the need to help, particularly some parts of the American economy. And we talk about that K-shaped recovery. Talk about the lower leg of the K, particularly as it pertains to the U.S. Chamber of Commerce, particularly small business, which is hurting across the country, and also some of the lower wage employees. Where does the Chamber of Commerce come out on that? How can you work with the Biden administration to address that, target it, as they say?
Yeah, it's a great question. And I think you know that the vast majority of our members are small businesses across the country. And we also work with state and local chambers across the country and trade associations every day. And I'll tell you, you talk to these small businesses and it'll break your heart. I mean, there is just crisis on top of crisis impacting these small businesses. We know that not only have hundreds of thousands of them gone out of business, we know they've disproportionately impacted Black-owned businesses and women-owned businesses. So exactly the wrong direction we want to be going in for families and communities across the country. I think there are ways, especially in the pandemic relief bill, to target aid to small businesses in the next round of PPP loans that could be extraordinarily helpful.
If you look on Wikipedia, which I confess I do, and look up the U.S. Chamber of Commerce, one of the things it says in the first paragraph is historically, over that 108 years, it's tended to be oriented toward the Republican Party. It looks like that may be shifting. Is that a correct perception, and will that continue?
And now I want to ask you if you also donate the dollar that they ask you to donate.
I do. It's on auto pay every single month. I do.
That's right. That's right. We believe in paid journalism, right? And paid writers. Look, I think the real issue is we did support more Democrats last year than we have before because they supported our priorities. So I think one of the questions is who's changing? Our agenda hasn't changed, not in 108 years. We sit at the table of job creators and stimulating economic growth because we know what a job means to a family. We know what a job means to a community. And so we're there every day. And we had more Democrats join us in that fight last year, and that was a good thing. I do think that I don't know a single member of Congress that doesn't want more jobs in their district. And so we will work with anyone who wants to work with us. And we think that we have a real unifying economic agenda ahead of us. And we need to stop thinking about these policy divides in a divided America and be some of the adults in the room who bring people together and start to heal the suffering, right? I mean, we have whole industries that have been just staggered, right? And we have families that are suffering. And it's time to put aside this bickering and agree that we're all in the same boat and we need to row in the same direction.
Administrations change, obviously, from time to time. U.S. business changes as well. And as you look at U.S. business, it really has evolved, particularly the advent of technology has become really prominent. And maybe some of the other parts of it, such as energy, some of the manufacturing, are not as prominent. You're a membership organization. How has the constitution of the U.S. Chamber changed? How do you expect it to under your tenure?
Great question. You know, I think we have something, I didn't look it up today, but something like a 95% renewal rate. So we're really lucky that companies that come here see a value proposition and stay with us. And we really appreciate that support, both the financial support and the intellectual resources and energy that these companies bring. I do think that just as the economy changes, 108 years ago, the membership looked different than it does today. And, we're lucky to have a number of both big technology companies and new economy companies and gig economy companies with us, and also the startups of tomorrow. So, part of what we have to do is ensure that the U.S. Chamber of Commerce is here for the next generation of business leaders and is here and strong 108 years from now. And that means embracing the industries of the future and still taking care of our traditional supporters.
One of the very prominent aspects of the Trump administration policy was having to do with trade, and particularly trade with China. I'm curious about what the U.S. Chamber's position is about what should be done right now with our policy on China. How much of what President Trump did should we keep? How much of it should we move away from?
I think it's a good question, and broadening it for just a second. I do think that the Trump administration did a number of good things for business on taxes, on regulation, on judicial appointments, but we found ourselves at odds with them on trade and on tariffs in a number of situations. And one of the things that we said a lot was, we need to not go at this alone. We need a united global community to be together on dealing with China. We're glad that the talks are going on, and we want, the administration to stay strong and stay tough.
Right now, we obviously have an impeachment trial going on up in the United States Senate. I'm not going to ask you about that, but I do want to ask you about the events of January 6th in this respect. We saw quite a few companies really have second thoughts about some of their political contributions because of that. Draw back, either suspend them for a period of time or say they're really going to review the entire thing. What do you think the aftermath for companies making political contributions will be of what happened up there on Capitol Hill on January 6th?
No, I think it's something that we're all looking at and thinking about. But I start with a really basic principle, which is that we all need to have free speech. We all need to be able to participate in the political process, that is really an important fundamental right for Americans and American companies. And in part of that, especially in difficult times, we need to look at the totality of actions, that the whole history of how people have acted. And what I mean by that is, and we've said this publicly, there are people who lost our support on January 6th, no doubt about it. But it won't be just a matter of one vote or one action. We need to look at the events leading up to that date and what's happened since then and who turns to governing and getting things done. And that'll be important as we and the whole business community looks at how we support government leaders going forward.
Okay, Suzanne, once again, congratulations. Really a delight to have you with us today. That's Suzanne Clark. She's the incoming U.S. Chamber of Commerce CEO. Still ahead, we're going to hear about efforts to build support for the president's latest stimulus plan with Cedric Richmond. He's senior advisor to the president and director of the White House Office of Public Engagement. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Our stock of the hour is Lyft, up nicely after the ride-sharing company announced earnings showing how it's getting more money out of every single ride. Emma Chandra is here to explain it all to us. Emma?
Thanks very much, David. Yes, Lyft, of course, trading at an 18-month high today. And this even as we heard that revenues had fallen some 44% in the fourth quarter. That, of course, due to ridership falling off a cliff at the start of the pandemic and not really making any sort of comeback as yet, David. Of course, what investors seem to like is this news that the company is managing to squeeze more money out of every ride. That through aggressive cost cutting. It even led the president and co-founder to say today that they expect to turn a quarterly profit by year end. Analysts have liked that as well. We've seen a flurry of action when it comes to price targets, at least 15 of them updating their price targets, most of that to the upside. The consensus price target now at $63, a good $7 above where the company is trading at the moment. Though, of course, David, when we talk about Lyft, you immediately ask the question, what does this mean for Uber? Uber, of course, its traditional rival. Uber reporting after the bell and also getting a lift heading into that earnings report, up around 4% in the day. And whilst I said it is the traditional rival to Lyft, David, of course, those companies now actually quite different. Lyft almost entirely reliant on the demand for transport. Uber is not. Uber has been diversifying. We've talked about this, David, as it has moved into the delivery space just last week, paying over $1 billion, mostly in stock for Drizzly. That's the alcohol delivery company. It closed on that Postmates deal, of course, last year as well. And so what we've seen is a divergence actually in the fortunes of those two companies. Uber, the stock price now up well above what it was at its IPO, and Lyft, despite today's gain, still well below it, David.
Yeah, all of us relying on it. Uber Eats all the time. Okay, thank you so much to Bloomberg's Emma Chandra for that report on Lyft. Coming up, GM earnings get a boost from demand in trucks and large vehicles, but a chip shortage is driving the stock lower. Part of my conversation with GM CEO Mary Barra. That's coming up next on Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. General Motors posted strong results for the fourth quarter and for all of 2020, despite the pandemic. We talked earlier today with CEO Mary Barra about how it managed to overcome the hurdles and about the transformation that they are making to zero-emissions vehicles by 2035.
We have a very strong full-size truck and our full-size SUVs that we launched on time last year, even with the pandemic. And I think it speaks to how popular the truck is. We have very different models that reach different segments, and so we've been able to grow share, and we're very proud of our truck leadership.
So, Mary, as you know so well, investors immediately say, what have you done for me lately? So let's look forward now to 2021, what you're expecting. You're projecting a strong year as well, even though you do have some headwinds from things like shortage of chips.
Yeah, we think we're going to have a very positive year in 2021, not only from a financial perspective, but also the continued acceleration of our EV and our AV business. We're really excited that very shortly we're going to be launching the Chevrolet Bolt EUV, which is a great vehicle, and that's days away. And then, later this year, we'll be serving the market with the GMC Hummer EV, and then the Cadillac Lyriq comes shortly after that, as well as tremendous progress being made from an autonomous perspective as well. So we're really excited about the year, the growth opportunities that we have in front of us. And so it's a year of execution. And, you know, the issues with chips, this is a short-term issue, and we'll work through it.
Well, is General Motors basically in the same boat as everyone else, or are there things that you can do to get something of an advantage over other automakers?
Well, I think in general, this is an industry issue. Of course, we're working every single day with a cross-functional team to look for opportunities of how do we minimize the impact. So we'll continue to do that. You know, we did provide the guidance with a fairly wide range, and we'll work it every day and provide updates as we go forward.
Mary, as you said, you've got a lot of EV models coming out, including, as you say, the Bolt EUV and the Bolt EV new model coming out. You're investing $27 billion. This is part of a multi-year plan here. As a practical matter, what are the difficulties in that plan? And particularly, I want to talk about supply chains, things like battery cells, some of the lithium issues. Do you anticipate possible problems with supply chains into your battery operation?
Well, I think, you know, we're one of only two automakers that are doing cell manufacture in this country. We also are doing a tremendous amount of development on our own and our own GM R&D, as well as partnering with startups and, of course, our joint venture with LG Chem that is development as well as production. So, you know, we're working hard to make sure we have all the cells we need, and we've worked, you know, through the supply base to make sure we do, because we are, as we've talked about, we're accelerating our EVs with 30 by 2025, and, you know, really covering the whole market. So, you know, we continue to work it, but we think we've got a very strong plan.
I did some rough math here. It might be wrong, but basically, if you made all of your vehicles as electric vehicles, you would actually be using more than the total amount of lithium produced in the entire world by yourself. So does that mean we'll have less lithium used, or are we going to find new sources of it?
Well, I think, you know, we're working on securing the supply that we need, but we're also working on development that allows us to use less precious metals overall. So it's kind of a yes and. Both are things that we're working on.
At the same time, when we talk about things like the Bolt EV that's coming out, questions come up of profitability. We had Daimler, a competitor, come out and say by the end of the decade, they will be making as much or more out of electric vehicles as they do off of combustion engines. What's your profitability path for electric vehicles?
Well, we have set a goal for ourselves to have margins from our auto business be at 10%. That's not changing. We don't talk about individual product line profitability, but I can tell you with the progress that we're making because of the work we do with battery development, from our first generation Bolt EV to when we get to Ultium, we see about a 40% improvement, and we're already working on the next generation of our Ultium technology that should take it to a cumulative 60 or more. So, you know, I'm very confident that as we move forward and continue to make advancements, not only in the cost, but in the energy density, that's going to allow us to have margins similar that we have today as we get into the mid and later part of the decades.
How much help do you anticipate getting out of the government? We have a new president now, President Biden, who says he really wants to go to emission-free vehicles in the government fleet very quickly. He says he basically wants to replace them all over a period of time, create 1 million new jobs. Is that going to help a lot your move at General Motors over to electric vehicles?
Well, I absolutely think so. I think understanding EVs, understanding the importance, and really we have to work together. Business and governments need to work together to make sure we have a whole ecosystem that encourages EV adoption. We need to make sure there's the right charging, and that's why the work going on for infrastructure is so important. So we're having regular conversations with members of the administration as well as members of Congress to make sure they understand all the pieces that need to come together to support an all-EV future.
That was part of my interview with GM Chairman and CEO Mary Barra. Coming up, as President Biden's $1.9 trillion stimulus bill enters the markup process in the House, is there room to negotiate? We hear from White House Senior Advisor Cedric Richmond. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. President Biden and his team are working hard to move forward his $1.9 trillion stimulus package, dubbed the American Rescue Plan. And one of those doing that work is Cedric Richmond. He is senior advisor to the president and director of the White House Office of Public Engagement. Mr. Richmond earlier, of course, served as a congressman from the state of Louisiana. So thank you, Mr. Richmond, for being with us. Appreciate it. Give us a sense of how the efforts are going right now. We saw the president yesterday with some business leaders. How's it going across the country? Because you really have your fingers into a lot of different groups across the country.
Well, look, we think it's going well. We think that the plan is already bipartisan. It enjoys support from many Republican mayors and county executives. About 74% of the American people support the American Rescue Plan. 50% of Republicans, 46% of Trump voters. So we think it's a very popular plan, and it's needed. And so that's why we have a sense of urgency with it. That's why you see us doing so much outreach to Republicans, to businesses, to faith leaders, to young people. You know, we're crisscrossing the country via Zoom and virtual meetings to make sure that everybody understands how important it is.
Are there certain parts of the plan that particularly resonate, or is it different groups are enthusiastic about different parts of it?
No, some portions of the plan are really, really popular. I mean, one of the most popular portions of the plan, not only the direct payments, but the assistance in terms of nutrition and the child tax credits and the earned income tax credit expansion. All of those things lift people out of poverty this year. And so they enjoy broad bipartisan support. And so, of course, money to schools so that they can open safely and we can get our children back in a physical school building, along with helping states and local municipalities support their frontline workers, is also popular.
So a lot of bipartisan support you recount, and the polls seem to indicate that, a fair number of Republicans as well. Is that going to translate into Republican votes up on the Hill, though? Because we haven't seen much of that so far.
Look, we hope so. And the president is working very hard to get Republican support. He's engaging with them. They're exchanging ideas. But the one thing the president is not willing to do is let opposition or inertia or obstruction slow down the relief that we have planned for the American people.
Where does the line come between obstruction or inertia, as you just said, and compromise on the other? Are there some things that the White House, in theory, would be willing to make some compromises on if it really would get the job done?
Look, I think the president has already signaled that he was willing to talk about targeting the checks to the middle class and the people who need them most, and those that are doing very well maybe shouldn't get as much or anything. But look, we're going to continue to engage Republicans and their ideas as this bill makes it through the process. And so we are willing to engage until it's passed. And we hope that Republicans would come along with us. We hope that they would offer ideas, and if those ideas are adopted, that they would vote for it. But at the end of the day, this is not about President Biden getting a feather in his cap. This is not about any particular accomplishment. At the end of the day, we are laser focused on delivering aid and relief to the American people that are hurting.
Where are you on the $15 minimum wage? Because there's been a lot of question raised about that, including whether you can get that done through budget reconciliation at all.
Well, the parliamentarian's going to make a decision on that, but we support the minimum wage, and we support it at $15 an hour. Look, American people are hurting. This would lift tens of millions of Americans out of poverty that are working every day. And so this American Rescue Plan is about uplifting the country, helping people who need it, and not leaving anybody behind. And so if you look at Moody's report, this plan would create another 7.5 million jobs this year. It would reduce the pain of Americans, and we would get back to full unemployment, where we were before the pandemic, in less years if we pass this plan than if we don't. If we don't pass this plan, it'll be 2025 before we reach full employment again. So we're laser focused on trying to deliver this relief, because we know exactly what it's going to mean to the American people. And then here's the other part about it. We need to stop chasing after COVID, and we need to get in front of it. And so the 5 bills that Congress passed, and I was there, they all had one thing in common. They were all too little, too late. And so this effort would allow us to completely wrap our arms around this pandemic, control this pandemic, and start working on restarting the economy and getting people back to work, people back to school.
So you're laser focused, and goodness knows you've got a lot on your platter right now. But let me get ahead of ourselves here a little bit, because the president has talked about Build Back Better. That's a second phase. That's not this. That's building back later on. Things like infrastructure. Have you started working on that at all yet?
Yes, we started having conversations, and we're going to have bipartisan conversations about infrastructure also. So when we met with CEOs, when we meet with business groups, when we meet with our friends in labor, we're talking about the American Rescue Plan, and we're talking about Build Back Better in terms of an infrastructure plan to fix the deferred maintenance in this country, to invest in broadband and things of that nature, and to continue to put people back to work, stimulate the economy, and get us going as a country.
Okay, thank you so much, and congratulations on your new position. That is Cedric Richmond. He is director of the White House Office of Public Engagement and a former congressman from the state of Louisiana. Coming up here, we'll address the effect of the pandemic on poverty in the United States and the economics of the issue with Wes Moore, Robinhood CEO. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The economic pain resulting from the pandemic is not falling equally across the country, and those suffering the most are the most vulnerable, particularly minority communities and most especially children in those communities. Wes Moore has devoted his life to addressing the needs of these underserved groups, including serving as the CEO of the Robinhood Foundation, the nonprofit organization co-founded by Paul Tudor Jones. Under Wes' leadership, Robinhood has become one of the most powerful forces fighting against poverty in this country, and we welcome him now back to Bloomberg. Great to see you, Wes. Thank you for being with us.
It's always good to see you. Thank you.
So one of the many reasons I love to talk about you is you really are on the front lines, particularly here in the New York area. Give us a sense of what's really going on across the poor in New York because of the pandemic.
I mean, the pandemic has been absolutely devastating. The reality is, if you just take a look at New York, if you had breakfast with your family today, you're better off than 2 million of your neighbors. Literally, right now in New York City, at the height of the pandemic, in New York City alone, 1 in 3 parents of small children were skipping meals or reducing meals in order to feed their children. The pandemic has had absolutely devastating impacts on communities. And really where you see it is it's on the communities where it was the most predictable that it was going to have a devastating impact. It was the low-income communities where there's concentrated poverty. It was on communities of color. Also because when you consider the fact that how many jobs were lost, many of those jobs that were lost, and particularly the ones that have not managed to come back, these were oftentimes the jobs in hospitality. They were the restaurant workers. They were the hotel workers, the ones who were oftentimes the low-wage entry-level jobs, but they were also the jobs that were keeping families overflowed. And so this has been a really complicated time for families in New York and also around the country.
So taking that need that you know so well and have identified, put it against what we're now talking about with this $1.9 trillion package, because there's a lot of talk about whether it's targeted or not. Is it targeted? Is the money, if it was adopted tomorrow, would it get to the people who need it the most?
It is targeted, yet not enough. And really what I mean by that as well is there are still nuances to the policies that are going to have a much bigger and much larger impact if we can actually focus on helping those who are the most vulnerable. One perfect example is I think about the child tax credit, where, in 2018, and this was before COVID-19, about 12 million American children lived in poverty, right? And child poverty nationwide, the costs are between $800 billion and $1.1 trillion. Again, we can't pretend that there is no cost to child poverty. The cost every year for child poverty is between $800 billion and $1.1 trillion. What we're looking right now with adjustments to the child tax credit is that if you look at the 2017 Tax Cuts and Jobs Act, it had a child tax credit provision, but it included an income phase-in that really prevented over 50% of Black and Latino children from receiving the full benefit. So there are currently 24 million children in this country right now who are too deep into poverty to be able to receive the credit because of this income phase-in. And so when we're talking about the bill that's being proposed right now, the thing that could have the greatest impact on our population, the greatest impact on child poverty, is if you can actually make the child poverty tax credit fully refundable. And also, in addition to make it fully refundable, you then make it permanent. By doing those two pieces to this bill, you would cut child poverty in half overnight, literally moving 4.5 million children out of poverty overnight. And so we're hoping that as we're having conversations about reconciliation, about the real drill down of these type of policies, that we understand the role that those policies are going to be able to make, and the adjustments on those type of credits are going to have a market impact on our communities.
And obviously there's a moral dimension to this as we think about how many children in this very wealthy country are poor, live below the poverty line. There's also, as you suggest, an economic aspect. I mean, if you really could cut childhood poverty in half, what would it mean for GDP, for example?
I mean, you're literally talking about adding trillions every single year onto our GDP, and the ability for us also to be able to unearth the massive amounts of intellectual capacity and intellectual talent that we are just completely squandering. We think about, for example, what's happening, within education right now. When schools closed, and in New York City alone, 300,000 school children lacked access to devices. 300,000 children lacked access to school devices to be able to do their work. In Baltimore City, where I live right now, 61% of ninth graders are chronically absent. 61% of ninth graders are missing more than 30% of the school year. And so when we think about what that means, not just in terms of what it means for right now, but what does it mean for the future? When 61% of your ninth graders are now unaccounted for. So we have to really be very serious about being able to put the resources in place right now to be able to protect for our tomorrow and to be able to protect for our day after. There are economic implications, societal implications on us getting this right now.
So Wes, we have to spend a minute or two on you, because you just recently announced you'd be stepping down in May, I believe, as CEO of Robinhood Foundation. Give us a sense of what you feel you've accomplished there and what has yet to be done.
Well, I am so incredibly proud of the work we've been able to get done as a team and as a community, really, for the past 4 years. I mean, in the past 4 years alone, we've raised $655 million as an organization towards the poverty fight, including $230 million last year alone amid the pandemic, which is one of the highest fundraising totals in the organization's history. We have focused and rooted our work in communities, and really created not just initiatives that are, for example, some of the first nationwide initiatives that we've ever created in the history of our organizations, investing in areas in Maryland and Pennsylvania and Illinois, but then also even having a community lens and a community vote for the first time in terms of where our capital gets distributed and which organizations receive the revenue. We've advocated for policy for the first time and built a policy wing. First time in the history of the organization, where we were fighting for pay for nonprofits. We fought for a moratorium on evictions and utility shutoffs, activated a relief fund amid the pandemic, and distributed over $65 million, mainly in emergency food and emergency cash assistance. So I'm incredibly proud of what we've been able to get done, and it's the right time for the organization to be able to have our new leader who's going to be able to build on that strength and foundation to be able to move us forward. And most importantly, it's just the right time for me and my family. I was actually, I even though Robinhood's offices are in New York, I never left Baltimore, and I've been commuting back and forth, and I stopped keeping count of how many bedtimes I was missing. And this moment, this time, really helped me to take a step back and think to myself, there were too many moments that I'll never get back that I wasn't a part of. And it's important for me to just center and level set about what this next phase of life is going to look like, and know that it is going to be rooted in those two faces that are sitting on my shoulder right there.
As you look to leave Robinhood and New York City, at least for the time being, Give us your thoughts about what New York City needs to do to get back up on its feet. We have a lot of people who are not in the office, and that hurts a lot of small businesses, frankly, who service those people. Hurts a lot of people with very low incomes. What do we need to do? What would your prescription be for New York City going forward?
Well, I think the first thing that I think people need to remember about New York is don't bet against New York. We've had this before. New York has had this situation where right after the horrors and the devastation of 9/11, people questioned whether or not New York could recover. Right after the financial crisis in 2008, there was so many questions about could New York actually rebuild after the type of economic devastation that it saw. After Hurricane Sandy, people questioned whether or not downtown could even be rebuilt because you had huge sections of the city that were literally underwater. And I think if there's anything that all of those instances and more have taught people is that you don't bet against New York because you don't bet against New Yorkers. But I think the thing that New York really has to do and center and focus on is dealing with a few core crucial issues. And I think this next leadership phase of New York, and whether they have the mayor's race, the comptroller race, the city council race is going to be important. It's about how do you focus on housing and jobs and education. You have to get those things right for New Yorkers.
Okay, well, Wes, it's been really great talking with you. We will look forward with anticipation of what you do next. We know it'll be terrific. That's Wes Moore, Robin Hood Foundation CEO. Coming up here, Balance of Power is going to continue on Bloomberg Radio. In our second hour, we're going to talk to Giovanna Di Maio, Italian political scientist, about Mario Draghi and Italy's future. It turns out Mario Draghi is a better politician than many people gave him credit for, at least thus far, in putting together a government that's going to have to address some big problems of a recession as well as a pandemic. This is Balance of Power on Bloomberg Television and on radio.